we're going to take a journey. This is the Trading 102 reverse engineer journey. Okay. And I'm going to walk through this. It's August 22nd, 2026. We're going to go through this journey together. And instead of me going and talking as if I'm someone who's been trading for 10 plus years and I'm a highly profitable trader, I'm going to start this journey as if I was just beginning, because I think starting the journey from where we're just beginning is going to allow us to grow into a understanding of what the first move is, right? So I think the very first thing that we're going to do here, guys, is dig into the fact of why we're here. Does that make sense, chat? Um, you're going to start trading, or anything that you do in life, you're going to have to come in and you're going to have to decide, um, what are you going to do? Why are you doing it, right? Because if you're going to play football, if you're going to play basketball, if you're going to play anything that takes skill or dedication or your time, then there's a purpose for why you're doing what you're doing. So here's what I want to do. I want to start by teaching you guys the mindset of how to accomplish goals and how we're going to start this journey. Hit ones in the chat if you guys understand that, if that makes sense. Am I explaining that correctly? No matter what you do, you're going to have to do it with a purpose. And if you're doing something with a purpose, and don't forget to hit the likes, guys, as well. Let's get that up. But if you're going to do something, you're going to have a purpose to it, and you're going to have to build on that purpose, right? It's the reason why you do it. I mean, why just do trading if you're not going to do something and take it serious, right? Makes sense? So the very first thing is we understand that if we're going to do trading, we're going to have to understand why we're doing trading. We're going to have the basic fundamentals of what's the purpose, right? So I'm going to say, and chat, let me know if this is correct. Most people start trading for financial success. So that would, to me, would mean something yearly. So let's say, what's something people normally want to make? Is it 50,000 a year for freedom? Is it 75,000? Or is it just, I always hear people talk about six figures. So if you start trading or want to trade or want to invest, is the goal to become someone who earns six figures? I think that's kind of like a common um, target when it comes to life currently, as far as how people start. If anything that they start, whether it's a career, a job, a business, a company, you want to be successful. And I think the successful part is six figures. So based on the economy and where we're at today, does that make sense? Hit ones in the chat, guys, if that makes sense. Hit ones in the chat if that makes sense. Are we talking about the right thing here? Is it trading or anything that you do, a career, anything that you put your time? Is it because you're going in there because you want to basically get yourself in a position where you're making six figures? Is that what's going on today? Is that kind of like the normal number? Six figures sound about right? Come on, chat, get involved, chat. We're talking about how to make six figures. You guys gotta type your fingers, man. You gotta get. You're never gonna make. I'm gonna be honest with you, man. I'm just gonna be real. If you can't get active in a chat, post things. Six figures. Get active. Get involved. This is real shit. Okay? So if I was going to be a trader and I said, look, I'm going to take up trading because I need to figure out what's happening in this crypto world, and I need to know why some guys are making $30,000, $100,000 and millionaires. I want to be one of those millionaires. So that's where we start. So I would say that I need to start my first year target of a six-figure salary, because if I can make six figures, then I can 10x that. So I need to make 100 grand so that I can make $1,000,000 over the next couple years. So we're going to take six figures, right? So this is how it works. It's pretty simple. So now that I have that number, I'm simply going to break it down like this. I know. So my goal is 100K. Okay. which now that I know that I need 100K, then what I need to do here is break it down to where how I achieve that, right? You know, why I'm here, what I'm putting together, kind of like the basics of that scenario. Let me make sure I'm in the right, putting you guys in the right page here. Which chart are you guys on? Well, you're in Doge. That looks like Doge. I see my chart being saved here, but I need to get you guys on. I need to enter it right there. There we go. That pop up for you. Let me get the pages right. All right, let's see. Select a page, OBS, we're Doge, apply. All right, here you go. So now you guys, you see this page here. You guys are good on TikTok. And now you guys are good here. Okay, so goal, 100K. All right, let's break this down. Now that I know that I need 100K, I just need a basic calculator. This is not hard. All I got to do here is break this down inside of my year, right? So I take $100,000, 100,000. I divide that. There's 56 weeks in a year, right? So now I know there's 56 weeks in a year divided by 10. Why am I doing 10? Is because my plan is to do 10 trades a week, right? Because I can always cut that number in half to 5, or I can double it to 20. But I like to do things where the numbers are easy for me to understand, and 10 is an easy number to move up and down. So I'm going to take 56 weeks, $100,000 divided by 56 weeks. Now, I'm going to divide that number, right? So if you took $100,000 divided by 56, that leaves you $1,786 a week. That's the goal. Okay. Now, 10 trades. Divide that by 10 trades. That means every trade that I do has to be $179. Okay. Now, this is my why. This is my goal. Okay, day 1, 100K, 1,786 a week. I need to do 10 trades and make $179. Now, this can be done in many ways. That is the basic bottom line to what I'm trying to accomplish, which means this. Let's say that I can only end up doing 5 trades, right? Which just means I take 179 times 2. That means I can get this done with 5 trades. That would have to be $360 a trade. Okay, so now I can do 10 trades. I can do 5 trades. The other option I have is very simple. I can develop where I need to make $179, or let's just say the 5 trades, $360, right? At the end of the day, the reality is I have to make $1,786. So what I can do is I can make this very simple. Is I can make it where if I'm making, let's say, we'll take this 360 and we'll double it, right? So let's say if I develop a trade that does 360 times 2, 720, right? I can make a higher amount of money on a trade. So instead of 10 trades at 179, I can do 5 trades at 360, right? And I'm still accomplish my goal, right? Now, this is the basis, and I can do math on this and we'll all down the road to make it any way I want. But I know my goal is $1,786 a week. Okay, so that's the goal. Everybody understand this? Hit ones in the chat if that makes sense. This is our goal. That makes sense? Now, we have to create what's called your trade structure. Everybody got the point? Everybody know how to break down their money? Now we're going to break down a trade structure, right? This is the boundaries and this is what we do. Now, if you do anything, if you go over to Google, right? If you go to Google and you Google a very simple thing, what percent of traders fail, right? And it comes out between 70 to 95% of retail traders and professional traders fail. And this basically lets you know long-term survival is only 1 to 5%. So this is a very tough journey I'm about to take. So I need to understand all the parameters of how to do this, right? 95% of traders fail, right? So now I need to know why and all that. And the beautiful thing about AI is you just put it in there. Here you go. Most traders lose money. Unrealistic expectations. Poor risk management. Lack of proven edge, right? The difference between day trading and long-term investing. Basic risk rules, right? So these are the things that you have to understand if you're going to be successful. This is where people are losing. So now what I want to know is this, right? What percentage of trades, what percentage of 10 trades, right? Because we're doing 10 trades. What percentage of 10 trades do average traders win? Right? So the average retail trader wins 40 to 50% of their individual trades, which means they roughly win 4 or 5 out of 10 trades. So now we know that the average is going to be 4 out of or 5 out of 10. So there's a 50% rule here, or 4 out of 10. So if you're skill level or you're just starting, you got to say to yourself, I'm going to win 4 trades and I'm going to lose 6 trades, right? So now that I know that, I can go back over here and I know that I'm going to win 4 out of 10 trades. So now that I know that I'm going to win 4 out of 10 trades, that is my basics right there, right? So now I have that set up there. This lets me know that no matter what my skill level is currently, the averages for most people out there, whether they're just beginning or been doing this for a while, is a 4 out of 10 trades, right? Professional traders often have, so here, average traders, which is usually panic and cut their winning trades too short to secure quick profit, but they hold on to losing trades for a long time, right? So average traders usually panic and they cut their winning trades too short, right? Listen to what he's saying. So when average traders, you, me, we're just getting started, the mistake that we make is we basically close our trades and our winning trades too short. But what we have is we hold on to our losing trades for too long. Now, the universal law that we're going to follow is going to eliminate this problem. I'm going to be a profitable trader on this journey from my very first start. Okay? I'm going to explain that to you. Okay? Now, this means their 4 to 5 wins are very small, while their 5 to 6 losses are massive, wiping out their gains. Professional traders often the exact same win rate, sometimes winning only 3 out of 10 trades, 30%. However, they are highly profitable because they have a strict risk management. Their few winning trades are huge, and their losing trades are cut immediately while they're still small. Okay? So, what that basically means is there is a universal law, right? You guys understand? I've been very guilty of that one. So I'm gonna solve that for you right now, big dog. James, I'm gonna solve that for you right now. Okay, so on this journey we're going on together here, I'm gonna show you how I'm gonna become a very profitable trader, and I'm gonna take you on this journey with me, and you guys can come with me to my 6 figures and beyond. Okay, hit ones in the chat if this all makes sense so far to you. This all makes sense to you? Very simple, right? Hit ones in the chat. Don't forget to hit follow, and don't forget to like the video as well, guys. So now that we know the numbers and the averages and we have the information that we need, here's what we have. There is a universal law, okay, which is you can only lose 50% of what you win per average. Okay? What this means is this. I want to be a profitable trader. Okay? Which means this. In order to be profitable, I have to win more than I lose. So I'm going to go ahead and design that from the beginning, mathematically and systematically, right? So the one thing about Trading 102, reverse engineering, the journey, it's not like a course. Courses are where they show you breakdowns. You try to follow patterns. You try to follow steps. It does not cater to each individual's mindset and skill levels that are currently happening with people. So we're going to work based on the universal averages, and we're going to design a systematic mathematical process that we can follow from day one to ensure that we are successful. And the universal law is you can lose 50% of what you win per average, right? You can only lose 50% of what your average win is, okay? That is the universal rule. Now, what that means is this. When I set up a trade and I go for a trade, for a profitable trade, right? And let's ask here. So, ask anything. What are the average gain percentage on these wins? All right, the average gain percentage for retail day trader on a single winning trade is typically ranges from 0.5 to 2% of total position size. For swing traders who hold positions for several days, winning percentages range from 5 to 10%, right? So we have a 0.5 to a 10%. However, professional risk management dictates that the trader should never measure their gains by arbitrary percentages. Instead, successful traders measure their gains using risk to reward relative to their count size. And this is kind of where the difference, we're going to show you the difference here to make sure you understand, right? Because when you're trading in these smaller scenarios like scalping, right, which is seconds to minutes, wins are tiny. They average 0.1% to 0.5% per trade. Day trading 0.5% to 2. Swing trading 5 to 10. Position trading, which takes about a month or for the entire year, is about 20 to 50. Now, what we're going to do here is we have a tool. Okay, we have tools, and new things that are now available in future trading that allow us to change these numbers mathematically and systematically, bring them into our favor. So the average day trading, which is kind of what we're going to be doing, minutes to hours, and swing trading, days to couple days, right? More of the day trading side, we're going to be looking for a 0.5% move to 2%. Okay, this is exactly what we're going to build our trading, right? So let's kind of, I'll put this here. The next thing that we're going to do here is, once we start getting these information down, the next thing that we have is called the is going to be your trade strategy, right? So that's what's coming up next. First, you have your goals. Then you have your trade structure. Then you have your trade strategy. Now, on our trade strategy, we are going to know that at the end of the day, we're going to be day trading, and we're going to be looking for averages of 5 to 2%, and also swing trading 5 to 10. So we're going to put those in there, because that is going to basically be the fundamentals of what we're trading. The process of when I build my trades, these are the trades that I'm going to basically look to build a trade and a structure to duplicate these trades. Right. So, and we're getting there, right? We're getting there. So you're saying, that's what I mean. So you're talking about 80+%, right? That's fine. We're getting there. But you're using leverage, right? You're using leverage, correct? Crypto, what up, baby? Crypto Focus. You're using leverage, right? Crypto, where you at, baby? So crypto Focus. You are basically, what up, MB, bro? Where you at, man? Crypto Focus. How? So here's a guy, Crypto Focus, that is. He says, no way. I'm winning. I'm doing about. So hold on. So he's doing an average. I do 20 to 80% per trade on average. Okay. Yes, I use $60 to $100 per trade, and a 12x and under leverage. Okay. So that right there, that is his structure, right? He has a structure where he does $60 to $100 per trade, and he does a 12x and under leverage. That is his structure. That is his boundaries, right? It depends on the coin and coin structure, correct? So what is your stop loss, Crypto Focus? What is your stop loss? So this is where we're talking about building a structure, right? That's going to be basically where things like this is what we're talking about. Is he has a structure that he's following. His structure is $60 to $100 per trade. He's using 12x leverage, right? What is your stop loss? I write it up till it takes me out. Okay, so focus. I write it up until it takes me out. So where do you start a stop loss? What's your starting stop loss? So what's your starting stop loss? Do you start with a 30% stop loss, 50% stop loss, 10% stop loss? Where do you normally, or no stop loss? Are you doing no stop loss? What up, Carl? Thanks for the follow, Carl. Are you doing no stop loss? All right, so you're doing, so he has a $5 max loss. He's out of a trade. Okay, so now crypto, that's perfect. That's a good structure. So now he has a structure. Once in profit, I move as it moves. Right. So let me ask you, if you were looking at your trades, did you write down your last 10 or your last 5 trades? How many trades did you win out of your last 5 trades? And how many trades have you won out of your last 10? If you had to say to yourself, you do 5 trades in a row. Go look at your positions. You ain't even got to look. Just pull up your positions. Go to your trade. Go to open positions. What are they called? You can go to earliers, right? So you can go look at your trading. You can go look at the trades that you've made. Go look at your position history. Count it down. Go to the last 10 trades you've done. How many of them did you win? I average 1 to 2 losses between each win. So what that means is, so you're about 50%. 1 to 2 losses for each win. So you're kind of like on the 4 wins out of 10. Right? You're 4 wins out of 10. So that's where he's at. For every win he gets, he averages 1 to 2 losses. So that's about the numbers we were just looking at on Google, which is about 3 or 4 wins out of 10. So that all makes sense. Now, a little bit what he's talking about, just so I can kind of explain to you guys, his structure is built like this, right? So here's his trade structure, and his trade structure is this. He does $60 to $100, and his doing a 12x leverage, and he rides it, and his stop loss is $5 max. Now what this means is very simple, guys. This is how you build your strategy. So he is willing to lose $5 every time he goes for a trade, right? And so what is your just to kind of give us an idea, not with this big, I mean, not to, last couple of days we have really big, right now we're pumping in the market. So these wins here are a little bit different. What before this week, over the last couple months, when you win a trade, what is the average win? Because you're doing $60 to $100. How much are you making per trade? What's the average win? All right, so when he does win, he's winning $40 to $80. So you're getting about, so that's where you're looking at, you're getting about 50 to 80% per trade. So he's doing his trade strategy, right, is giving him about a 50 to or 40 to 80% average win. Because he's doing a 12x. He's doing $60 to $100, and he's getting $40 to $80 per trade when he wins. And when he loses 2 to 1, he loses $5 or $10. So which means every time he wins $40, if he loses the next 2, he ends up losing $5 and $5, which is 10. So that means that he has won 40 and has lost 10 in those trade scenarios. And if he does it again and repeats it within 5 trades, he's probably going to win $80 and lose 20, right? So that's kind of where he's at. He's going to win 80 to $100 and he's going to lose 20 to 30. So that right there is his trade structure. Like yesterday I had three trades open. I did about 150% on all three, but that's not the average. Yeah, that's not the average day. I make more money when the market dips. Yeah, we got shorts. You got to play the shorts, right? But what that is that's a good trade. That's what we're looking for here. That's a trade structure. His trade structure is simple. He's winning $40 to $80 and losing 20 to 30, right? So his 20, let's say his $20 or $30 losses, if we double that, that would be $60. He is winning more than $60. He's averaging 60 to $120. So he has his perfect trade structure right now based on his skill level to where he's winning twice as much as he's losing, even though he's winning 3 out of 10 trades or 4 out of 10 trades, which is the low average side, right? So skill level, and this is where as your skill levels get better and your ability to build a trade, right? When you have a trade strategy, when you start building better trade strategies, you go from winning 3 or 4 out of 10 to winning 6 or 7 out of 10, which means less losses, more wins, which means bigger gains at the end of the day, which is a higher skill level. But this is a perfect example of being a profitable trader while being on the lower spectrum of things, where you're winning 3 or 4 out of 10 trades, but you're getting $80 to $120 in gains while you're only losing at the end of the day $40 to $60. So you are doubling, right? So that's kind of how we could look at it and say winning 4 trades at an average of $60, right? 60, 61, 20, $240, and then losing 6 trades at $5, which would basically be putting you in a $30 loss. He's winning, like we just went over. His wins are equivalent to 60, 80, 120, 240, while he's only losing $40 to $60. So he is winning twice as much as he is losing. That is the only thing you have to do to be a successful trader. You guys understand that? That's how easy. That's the universal trading law. It's the only law. It's the universal trading law. It's the only thing you have to do. You have to learn, and what he's done for himself is when he wins his 4 trades, let's say they're $40 a trade, 40, 80, 160. When he loses his 6 trades, they're $5. 5, 10, 15, 20, 25, 30, right? Winning 160, losing $30, 4 wins, 6 losses. 4 wins, 6 losses. 120 in profits, 30 in losses. The end of the day, his losses are way less than 50% of his winnings. That is a profitable trader. When your profits after every 10 trades are way bigger than 50%, you are a profitable trader. And he has a, if I lose 2 trades in a row, I'm out for the day. So this is another part of understanding, like how long you been trading crypto focus, how long you been trading. So that's another thing about your trade structure. is like you have to have these rules, right? And rules are set up to where, and that is kind of, he's been trading about 2 years. So he's still trading a little emotionally, because the thing about when you design, and this is down the road, but when we build a trade strategy, there are no emotions, right? If a trade strategy loses 2 times in a row, we enter a third or a fourth time, because we know it's called the law of average, that when we back test and we test a trade strategy should never lose 3 times in a row. That's just bottom line. There's something wrong if your trade strategy of how you, and a trade strategy is basically this. You design where you can recognize a trade, why you're going to make a trade, why you decided there's a trade possibility, and then you have a 3-step process to entering the trade, or how you enter the trade. And when you follow those exact steps over and over and over, that is your trade strategy. And you then learn to tweak, adjust, and fix your trade strategies and your entries. It's really always about your entries. I'm gonna tell you that the second thing in the world is, you will be a great trader when you master the entry, nothing else. The entry is where all the money is made. When you enter correctly, you get the most percentages without the risk of losses. It is the entire reason you are going to be twice as successful than everyone else, or reach your goals a lot quicker, is your entry. Your entry is everything. That's the second universal law. The entry is the only thing you have to master when it comes to your trade strategy. Okay? Now, I can tell he's he's still 2 years in the game. He's still trading emotionally, because when he has 2 losing trades in a row, he gets out. That's because he might not have a full trade strategy set up that he follows every single time, step by step, which allows him to know the winning percentage, the law of average, meaning that when I develop a trade strategy of how I enter, and when I develop my entry, my trade strategy is going to be one that I can count on to win basically 6 to 7 times out of every 10 times I use it. So if your trade strategy isn't winning 6 or 7 out of 10 trades, then you need to further develop that. And that's where skill levels come in, is building trade strategies that are highly successful. Okay. Now, his trade structure is very phenomenal, where he's found a way. He realized that at the end of the day, that he by putting a $5 stop loss, and when it hits, if it hits twice, he's done for the day. He has started to teach himself not to be emotional and not revenge trade, because he's trading emotionally right now. And that'll change over the next year or two, when he learns how to be systematic and remove emotions from trading. He's still an emotional trader. He's still new in the game. So that's why he has those rules in there: lose twice, I'm gone. But by having a $5 minimum loss per trade, has allowed him to at least understand he needs to have a really good entry. And when he does enter a trade, it has to be have a very high law of average of being successful, because if it loses twice, he gets out. So when it does do well, like I said, he's getting $40 to $80 on his trades, and when he loses, he's only giving back $5. So it doesn't matter if he only wins 3 trades. 40, 40, 40 is 120. And if he loses 7 trades, that's $5 times 7. It's only $35. So at the end of the day, he lost 35 but won 120. The main goal is to win 50% more or double what you lose. So if he's losing $35 on 10 trades, that means he has, when he wins, he has to win at least $70 on his 3 trades. That makes him a profitable trader. He is winning twice as much as he loses. Does that make sense to you guys? Hi there. What's up, Trucks? Do you guys understand? That right there is the only thing that you have to understand. Trunks, what up, baby? Thanks. Hey, Marvin, thanks for the roses, baby. Don't forget to hit the like button, guys. Keep hitting the likes. We got to get to 10,000. But you guys understand what I'm saying is you have to get to the point where that is the only thing that matters. He's still learning how to trade. Harry, what is going on, Harry? He's still figuring out emotions. He's still figuring out trade strategies. He's got a long way to go here. But what he did learn is that he doesn't, Coin, what's up, Coin Salary? He knows that when he loses, he's only giving $5. That's very tight. That's a very tight stop loss, right? But if he loses 7 times, it's $35, which means when he wins 3 times, he has to win above 70. So each of his wins have to be at least worth $30, right? So no matter what, he has to win $30. So he's at the point where he's right in his zone. He has to win $30 a trade because he's giving back $35 out of 7, and he's only winning 90. You see what I'm saying? He wants to be in that double part. So he's right there. Now, could he open up a little bit more and move his stop loss to $7? He could, because he has that window, because his gains are his ability to win higher numbers are actually better. So he could give himself not a $10 but a $5, but he could go up to $10 if he wanted to basically go in there. But I like it at the $5 because that's going to teach him right now where he needs to work on his entries to get into more trades or stop losing that $5 trade. Down the road, he might have to make an adjustment to where he says, you know what, I'm going to move it to $7 to see if that helps me survive a couple trades as he gets better on his entry down the road. And eventually he could go to $10 so that he can say, well, this coin normally pulls back $7 before it goes up. No matter what I do over the last 3 months, I can't get out of that area. But when I'm right, I'm winning 40 to 60. So if he's averagely, 40, 80, 120, the end of the day, he can give up $10, right, on 6 trades and still be in the same boat, right? But that's where he has to learn his strategies, and he's going to work that out himself. It's all skill level. It's all individual. Everyone has to build their own journey, but that's part of what that's going to be there, right? So that's part of the development of it, right? Still learning myself, but I'm in deep with Cat Coin. Cat, is that K Coin? Any words of wisdom for? So, I'm gonna be honest with you, Len. Trading is like, well, you're coming in at the beginning of what we're talking about here. So if you guys miss any of this, VC Crypto Nation is exactly the same thing on the tube. So you can go check out the YouTube. It's going to have the same videos there for you, which is what I'm recording right now. So right now what we're doing is recording as if I'm going through my day one. So day one is planning out my journey, right? So to kind of do a recap of where we're at today for you, it's very simple. What we did here is we turned around and said, okay, we got to lay down why we're here. So at the end of the day, we've come up with our goal, right? Which is this right here. The goal is basically very simple. We're getting into trading because we want to learn how to make 6 figures, right? So this is our goal right here. That's the first thing, $100,000. That means we have to make $17.86 a week, which means we have to do 10 trades that are equivalent to $179 or 5 trades that are equal to $360. That is what we need to do to make our goal, right? But we need to make $17.86 a week, right? And however we chop that out and whatever we need to do to get that there, we're going to figure it out. But that's the understanding of our purpose. And now that we have our purpose, guys, now we move over to trade structure, which is kind of what you were hearing me talk about, how we build our basics, right? So we know that the average trader or the new trader or the really good professional trader normally only wins 4 out of 10 trades, right? Now, the universal law, the only thing you have to do to be successful is you can only lose. You cannot break this rule, okay? Listen to what I'm saying. You cannot lose more than 50% of what you normally win, right? So you can't have a situation where you averagely win $50 on a trade, and then when you lose $40, right? Because that's above your average. If you normally win $40 on your trade, that means your stop loss has to be half of that. So if you normally win 40 bucks, the maximum stop loss is 20. And you want to cut that down a little bit so you'd make it $15, which means you can only lose $15 per trade. That is your structure. That is called a trade structure. The trade structure are the rules, the boundaries, and the structure of your systematic trading system that you're building. These are the rules you have to follow to be successful. You cannot lose more money than you win. That is it. And you must win 50% more than you lose, because that's the only way we're ever going to reach our goal. So right there, that is the fundamental rule, the universal law that we have to obey and follow. So when you build a trade structure, that is the way it is. But we're talking with Crypto Focuses, he does $60 to $100 per trade. He uses a 12x leverage, and he rides it out until he gets knocked out on his profits. But if he loses, he only loses $5. But when he wins, he's winning $40 to $80 a trade. So his 3 wins at $40, $80, $120 on 3 wins, $120. When he loses 7 at $5, that's only 35. So 35 and 35 is 70. He's averaging 40, 80, 120. So he is above his 2 times. So he is winning twice as much as he's losing. So he is now considered a successful trader. That is kind of like really what we're talking about here. So that's really what that comes down to. So that is the only thing you need to do, guys. That's the universal law, right? So here is an example of a trade structure, right? So we're going to do it a little bit different. We're going to kind of come in here. I'm going to put this here as a quotations, as basically what is out there, right? So here's what we're going to do. So I'm going to do $1,000 a trade, and my stop loss will be, so on this, so my goal is this, right? So I do $1,000 on a trade. I'm going to do a 30x. I'm going to be looking for $300 per trade, which means that my stop loss means I can only lose $100 per trade. So that right there is the beginning of the structure of what we're going to do. Now that I have my trade structure down, now what I need to do is I have to figure out, now that I have my goal, I have my purpose, I have my targets, I have my why. Now what I have to do, and we're going to do this throughout the week, I'm going to go live on Mondays, probably Monday, Wednesdays, and Fridays, right? Monday, Wednesday, Fridays, or Monday, Wednesday, Thursdays, and Fridays. And I'll hop on Saturday. Is we're going to do the next part of this, right? Which is the third part, which is called trade strategy. Okay? This is where we can look at anything. And what I'm going to do with you guys is I'm going to go over all the different strategies that are on YouTube. I'm going to pretend and what's that? I already blocked him, Crypto Focus. I blocked him. We blocked him right away. So what we're going to do is we're going to take this journey. I'm going to take the journey as if I'm a brand new trader, right? So, yeah, I'll get some moderators in here, guys. So we're going to start going live. So if you guys start popping in every time, I'll make you moderators in there. You guys can take care of that. Let me see here. Marvin. I have to figure out how. Oh, here we are. All right. So right now you should be able to do moderating. Let's see here. Okay, confirm. All right. So there you go, man. You see anybody that's doing that, Marvin, block them. All right. So what we're going to do here is we're going to take this journey as if we're starting the new trip, the new journey, right? We're going to do this basically together, and I'm going to take the I'm going to do it just like we do it all the time. So we're going to review trade strategies. So we're going to now the most common trade strategy is going to be support and resistance, right? Oh yeah, we called the bottom at we called the bottom 2 weeks ago. So we're basically looking at what, like I said, I want to do this journey, like everybody does. I want to go through here and kind of like, do it like I'm a new person, right? Like what do new people do, right? And so what new people do is basically, is to go and look at YouTube. So we'll look at YouTube and let's find some strategies. We never know what we're going to find, but we're going to go out there, we're going to go through this, and we're going to do this together. Right? I want to take this trading journey with you with a very simple thing. I'm not too worried about it because the fundamental universal law that I have to follow is make twice as much as I lose. So I know we're going to make money. So we're going to be all right. Yeah, look at Marvin. Yeah, Marvin already putting in work. That's what's up. Y'all don't mess around. Marvin will get you. So that's what we're going to do. So we're going to take a look and like, jump in there and basically find some trading strategies. Let's go look at some things that people say that work, right? And then let's back test them, right? Because we got to build a trade strategy. How we're going to build a trade strategy? We got to go build back testing. We got to look at, trade strategies and then see if they work, right? Because we know what we have to do. Now we have to go do it, right? So let's figure out like, let's do a run here. So let's pull up YouTube. All right, let's see here. All right. big game, crypto trading guide, step by step, ultimate crypto trading course, Bitcoin, the unthinkable, how to start day trading, become a crypto trader in 30 days. All right, keep trading, learn crypto fast, how to trade crypto fast and complete. Let's see here. So what we need to do is find out how to make $100 a day. Okay, here we go. How to make $100 a day trading crypto as a beginner with actual examples. So we'll take one of these.
Interactive Brokers gives you broader access to stocks, options, crypto, and prediction markets. More products, more trading opportunities. With over 100 ways to execute your strategy. An AI-powered...
Can you trade every day? Yes. Is there a trade to be found on every chart every day? Yes. But the big ones where you really multiply your money, where you turn 200,000 into $1 million, that happens because you're waiting for the perfect setup.
Today, I sit down with professional trader AJ Writes Crypto.
You don't trade because you feel like it. You don't trade because you're in the mood. You trade because an alarm went off and you need to react to the market.
As I continue my journey to learn how to trade and how to win.
Guess what? I'm still in the trade, winning more and more and more money.
AJ shares with me a few simple techniques to make $100 a day trading crypto, as well as the risks. But most people will lose money trading. Correct? And watch today's entire video as AJ executes a live trade on camera.
So now with stop losses and take profits, it's actually very easy to do on BitUnix.
Sign up with exchange partner BitUnix today, and only with referral code Altcoin Daily, earn over $8,000 in trading bonuses, as well as a free $10.
In the world of TikTok, and I want in the world of TikTok, and I want it, and I want it now.
Why do I not hear you, brother? I mean, I got the sound hooked up. What's going on? That speaker's right there. Volume 100%. I should be hearing him.
They won't take the time to properly use risk management, to properly set up their trades. They just look at a chart and say, is it going to go up or down? Let's go. So the way I trade, which I'll get into in a minute, is really about when there is a significant occurrence, that is when you should take risk. You don't take risk just because. You only take risk when there's something happens that is like, this hasn't happened in so long. Like, this is worth rolling.
You guys hear the audio, right? You guys can hear the audio? You still hear the audio? You guys hit one in the chat. Hit one in the chat. You guys hear the audio, right?
The dice on. And I feel that if more people could really pick their shots, if you're trading every single day, you're doing it wrong. You really have to be patient. You have to set your alarms. You don't trade because you feel like it. You don't trade because you're in the mood. You trade because an alarm went off and you need to react to the market.
That makes sense to me. Like, in basic terms, if it's trading between two ranges, you know, wait for the breakout, yes, but wait for the confirmation of the breakout. Most of the time you're not trading. It's just
weak trading when you're really, I will not be in this for weeks. I have a really tight stop loss. let's go for it. And I feel a lot of people get lost where, you know, someone will, you know, buy $1,000 of a coin and they'll make it to 1,100, and then they'll send me a DM and be like, should I sell? And I'm like, well, what was your goal before you put that $1,000 in? So I think a lot of it is knowing up front.
See, that's what we're talking about right there, guys, is by having our trade structure, right? We have our goals, right? We know that our goal is we need to make 10 trades that make $179. So we can get it to where we know that our target is $179. So we have our goal, 10 trades for $179 or 5 trades for $360. So that's where we're not confused. That's why you have to have this day one done, because that's what you need to do. So we got that part done there. We know our target.
What are the terms and conditions of your trade?
Let's flip the camera. Show me a couple of techniques that you use to make money in crypto, as well as setting the stop losses, setting the take profits.
Okay. You can see the chart.
Looks great.
All right.
So now we're going to see his strategy here. So we're going to take his strategy and we're going to use one of these. If we like it, we'll see about developing it into a trade.
So you're going to do all of your homework inside TradingView. You're not doing your charting inside whatever exchange it is you're trading. You're doing your homework in TradingView. All right. And so generally there are, you know, what you're looking for in any chart is confluence. So if you're trading because of one indicator or because of one RSI or one volume profile or one idea, yeah, theoretically you could trade off one idea, but what you're looking for is confluence and for all of the indicators to point in the same direction. So, and there's a couple ways to do this, and I want to explain a handful of ways. So this is the chart for Algorand, and why I started with this chart is because I made a lot of money trading Algorand, all based off, seriously, one concept plus confluence. So right here, all the way back in December of 2022, this massive support resistance level printed right there at 16 cents. And then every time Algorand has gone under 16 cents, every time it's gone under 16 cents, or hell, even every time it touched or retested 16 cents here, and even more recently here, that has been the time to buy. That is the accumulation spot. I mean, let's look. So from right here, from 16 cents, boom, 103% in 53 days. Right here from 16 cents.
We're gonna have to order. We're gonna have to order YouTube Pro. We're gonna have to get rid of commercials, guys.
296%.
We're gonna have to upgrade.
In 18 days. When Algorand breaks 16 cents, or if you can accumulate under 16 cents, you are making money. To be fair, right now, Algorand is 22 cents, so it is a bit above that range. Actually, if it went back to its local high, it would be 173% up. But so why am I talking about this? I'm talking about this because it did recently have a bounce off of 16 cents. So now we kind of want to zoom in more and investigate. If you kind of look here on market
right now, he's on the
B,
daily.
I'll pull this up a little bit. You will see as the price was coming down the hill, Market Cipher was going up the hill on a daily time frame.
And what is that tracking? Like Market Cipher tracks what?
It's a volume. It's an oscillator. It's a bunch of indicators slammed into one, like, you know, kind of RSI, money flow, VWAP. It's a momentum oscillator. Okay, and the general takeaway is when you kind of see these momentum waves, you would call this bigger one an anchor wave, and then these smaller ones would be called trigger waves. And as you can see, this is curving up and to the right as this is coming down into the left, as the price action is coming down into the left. And when the momentum oscillator is pushing up and the price is coming down, they're diverging. And that divergence is what you're looking for. So when you kind of see all at once, remember, confluence is the combination of ideas, right? So when we kind of zoom into both, we will see, oh, okay, right here, when Algorand hit 16 cents, that magic number, it printed this this trigger wave right here after a bull div, as the money flow is, getting less red coming into the green. And right here, it cleared the 50 EMA. I mean, that's what those are the things. I know I don't want to overwhelm the audience. I don't want to overcomplicate things. I want this to be simple, but
not about the audience. It's about me. Keep it simple for me.
That's fair. That's fair. But
so on here, this is a style that he's using an oscillator. He's using, this is a lot on a chart. It's probably, and we could probably go back and we can look at this. I don't think it's this. This is kind of where he's coming to a support. He's using volume and oscillator to kind of identify momentum moving up, why it's coming down, and then he has a breakout. It doesn't really. I don't know. What do you guys rate this from a 1 to 10? I give this. I'm giving this like a 3. I mean, so far, we'll give him 3 more minutes, but right now,
I just want to say that I got trading, you can make it as simple as 16 cents buy, but then once it hits 16 cents, the why, and the why is confluence based off of volume profiles, momentum oscillators such as RSIs, MACDs, or something like Market Cipher, EMAs, moving averages is a big part of it too. So kind of once you hit a certain level, or say, I'll explain on another chart what a conditional range is. Once you hit that alarm,
if you've traded options before and you
so I'm giving this guy, like, you guys with me on this? I'm giving this guy like a 3 right now. I'm not really feeling like this is going to be something easy to do, right? What do you think? What do you guys rate it so far? Let's have him move to. All right, here's another thing. What do you guys think?
We had a touch here and we had a touch here. So we're still in a confirmed downtrend. So when this alarm goes off, we will be looking at, oh, wow, this alarm finally broke. But the thing is that alarm goes off. Do I trade or do the why? And the why is a big part of it too. So kind of once I like to go through something I like to call the confluence checklist. So once the alarm goes off, do I trade or do I not trade? Well, let's check the confluence checklist. And that has everything to do with, the momentum oscillator, volume profiles, moving averages, etc. So when the big deal with Algorand was hitting 16 cents. And if it ever goes under 16 cents again, buy it. But in the meantime, you also want to take the patterns into consideration as well. Let's kind of ignore Market Cipher here and kind of look at, okay, well, we hit this high in December. We had a touch here and we had a touch here. So we're still in a confirmed downtrend. So when this alarm goes off, we will be looking at, oh, wow, this alarm finally broke. But the thing is that locally down here, it's been in a local uptrend. So Algorand is very close to what I like to call a point of intersection, where this local, this multi-month downtrend collides with the, local uptrend. That point of intersection would be May 6th, Tuesday, May 6th. So in 5-6 days, Algorand will be forced to lose the local uptrend or break the multi-month downtrend. And that matters. You want to put the chart in a situation where it has to break one way or the other.
Breakout or rejection breakdown.
Exactly.
When you say alarms, is there any way to actually physically set an alarm? Oh, it's about this price. How do you do that?
So let's look at once you identify, okay, this level is extremely important. You make a trend line. So let's kind of delete the trend line.
He's looking at Cardano.
You go up here, you click on trend line, you pull this across this way, okay? And then you click on it, add alert on trend line right there. If you only want it to go off one time, click only once. But if you want to leave the alarm on, so it goes off anytime it comes up or down from that line, click on once per bar. I generally leave it on once per bar so I know each way. And then you can name the trend line, ADA, Big, SR, something like that. Click create and boom, now we will know if that is to break. And interesting enough, Cardano is doing something similar, but not exactly for as long as it was before. So right now, Cardano is in just a basic parallel downtrend from the local high back in December. And then it kind of put in this little local low where's my brush? Right here around 50 cents. All right. And then it started to walk up the hill as, Bitcoin and all the other altcoins started to walk up the hill. So let's kind of zoom in on the time frame here and kind of examine what's going on. So the yellow lines are the full trend, or excuse me, these yellow lines are the full current range of Cardano, where since it has come up into this level, Cardano has spent almost 9 days in a 12% range. But the heart of this range, the most of the time throughout this 9 days, it's really been inside of a 4% range. So trying to find the range within the range is kind of what I like to call tightening the range, because it's about like I said with the Algorand chart, is to put the chart in a situation where it has to break one way or the other, right? So when we add in the trend line here as well, you'll see that for Cardano to break this support resistance level around 71.8, it will be forced to break out of this local downtrend. So I would say 71.8 would be a great spot to go long on Cardano.
So let's just say I totally understand the reasoning for this. If I wanted to go on BitUnix and
$1 million on the order did or cross.
Last week, I took home a prop firm payout of $7,800.
So I'm going to go ahead and say, like, for me, building that trade strategy, it's just support and resistance, and he's really just waiting for it to break out. So this is an example of what most people trade is called trading the breakout and the retest, where it breaks out of something, confirms a move, and then you ride the momentum. Does that make sense? How many of you guys trade like that? How many of you guys do that type of trade? Right? How many of y'all do that type of trade? So for me, I'm going to say, like, all right, so here's an order flow strategy.
Biggest World Cup day trading champions ever. At just 26 years old, he traded in the most prestigious trading competition on the planet, up against veterans, full-time professionals, people who've done no financial advice, everything to...
What are their, or setup, what I didn't realize...
Very impressive. But what is the number one thing that clicked that allowed you to not just be a guy trying to figure this out anymore, but actually trade at an elite level like that?
So, I mean, I've been trading for a while, and in the beginning, I had no idea what I was doing, right? So I'm basically looking for setups, looking for patterns, and it took a while of me just kind of strategy hopping and focusing on like entry models and setups to realize it's not really about that. Because at the end of the day, when it comes to like an entry model or setup, what I didn't realize at the time, I used to put that as the holy grail, thinking that if I can just find the right setup or the right candlestick pattern that I can just do over and over, that's going to make me successful. But what changed was I needed to understand what it is that I was actually doing in terms of what am I participating in, who are the other participants, what are they trying to do, what are their essentially like limitations, and where do they need to start actually participating in terms of being forced to participate, and then trying to build context around trade ideas. And then what ends up happening is entries, setups, it comes down to like the final 5 to 10%, because at that point, all you're doing is you're just confirming or denying whether or not your trade idea is valid in the first place. So really shifting that focus over towards really execution, because in the beginning, all I thought about was money, but the money is the byproduct of proper execution.
Right.
And it took me a long time basically to
I like this.
come to terms with that.
So
it's all about execution.
In the byproduct of the execution. Now, you said you were strategy hopping, and you still use some form of a strategy, I would imagine.
So that's what I was telling you guys earlier, like the entry, the execution of the trade, and when the structure is just to guide you, to protect you, to make you profitable. Now, the next thing that we're really looking at is the execution of the steps, the trade strategy, and the entry. That is the skill level difference of making money. That's what I'm talking about. So I like this. We're doing okay here. Let's hear what. Let's see what the. Let's see if we can get some from this.
But you said forced participation also. So this is more on the microstructure side of markets and how they exist mechanically. Is this what you're looking to exploit?
Yeah, so basically I'm a day trader. I'm an intraday trader, and I'm really only trading the first hour and a half of New York Open. Sometimes I trade Asia session. But what I mean by forced participation is, let's say, in the market I view it as an auction. It is an auction. You have buyers and you have sellers. When you have buyers and you have sellers, you have positioning. And when it comes to positioning, let's say we're balanced, right? You have a very defined range. There's position building within the range, and buyers and sellers are comfortable in this area. We're building value here. Because the purpose of the market is to determine the value of this asset, right? So there will be times where they're temporarily in agreement, where they're comfortable. No one's getting forced to participate, they're building positions. The moment that one side basically starts to get more aggressive than the other, well, then it starts forcing participation. This is the way I think about it. And what I mean by that is, when you are a buyer, you basically, and you're in a position, you have two options if the trade is going against you. Either you try and defend that position, or you try and add more into your position,
or you sell,
or you're going to have to get out. And when you have to get out, well, what do you do when you buy? You have to sell to get out of your buy position. And so I'm looking to not necessarily trade when the market is balanced, but when the market is starting to force participation on either edge, and I'm looking for that participation necessarily, or to fail in a sense. And when it fails, it creates trap participation or trap participants. And that's when they're off sides, and then you don't need to catch some type of home run. I'm just looking for 50 points, 100 points. I'm just trying to take sometimes mean reversion, but really it's more about where.
Very important. So listen to what he's saying. He has targets that he's trying to take. That's what we were talking about, is you got to have targets of we're going for $300, right? We have targets. We need we're doing a 30x leverage, which means I need a 10% move, which means in reality, if it moves 1% and I have a 30x leverage, that means that I'm going to get 30%. So if it moves 0.5%, 0.5, I'm going to get 15%, which will hit my target at 10%. So I'm looking for a 0.5 move. Same scenario, his 5 area, he's in the same scenario. So I'm liking this video here. So I'm getting more information. I'm getting something we can use here. So we'll dig in here.
Building value. How are we moving out of it? They're making effort, whether it's buyers or sellers. Are they being successful with that or not? And if they're not, then you can try and take advantage of it. And that's what I do, at least.
Excellent, Chris. This sounds highly advanced or sophisticated, I should say. I want to see it drawn on our whiteboard step by step, so the audience has a good idea of how they could implement a process like this on their own and not leave it too abstract. So if you don't mind, let's jump onto the whiteboard. So Chris, walk me through step by step from the moment you open a chart and get trading, exactly what you're looking at, all the way up until you take a trade and then exit that trade.
Yeah, so the easiest way to probably do this is to break it down into 4 different steps. Now, basically it's context, location, then confirmation. But the way that I look at it, and we'll kind of mark it out here, the first thing that I look at is environment. So when it comes to environment, there's a couple different pieces to that. Now, what I want to understand is, are we currently in a value up structure, a value down structure, or sideways? Now, what would that actually look like? Let's take a specific scenario so that it's a little bit easier to draw out. Now, let's say that the market has been moving something like this. Now, in a scenario like this, where are we typically creating value? Well, we would probably be creating value here, then here, and then we are currently searching for new value. Now, maybe that would be somewhere over here, okay? Now, what I'm looking at, heading into the session is I want to understand what the higher time frames are doing. And so this would be viewed on, let's say, like a 1 hour chart, maybe a 4 hour chart. The purpose of this is to understand what has the week been doing, what's the previous week been doing. So it's very basic market structure, higher highs, higher lows, understanding how value is getting created. Is it getting created higher and higher? And the second piece to this is understanding gamma or gex. Now, the gamma or gex that I use something called naive gex. Now, there's different, you can use inferred gex, which is basically how they calculate their models to determine the levels. But I like looking at NQ levels. So that would be QQQ, NDX. The CBOE doesn't have the data for that. So majority of NQ is going to be like naive gex calculations.
And what does gex tell you?
So gex, when it comes to regime or environment, let's say we have gex, okay? It stands for gamma exposure. Now what this is why do we care about gex? Well, we care about gex because the options market is one of the largest markets, if not the largest market in kind of the trading world, right? Now, when the options market are doing transactions, you have dealers and market makers. And dealers and market makers are not necessarily in the business of being directionally exposed to the market. So then what do? Let's say they need to hedge a position to stay neutral. Well, they will go to one of the underlying, being futures as one of them, and they will then hedge in that. When you look at a gamma profile, what you're typically going to see is you're going to see positive gamma, which is oftentimes represented as like green, or you're going to see negative gamma, just say negative. So you have positive and you have negative. Now, this is very easy to misunderstand because sometimes when people see positive gamma, they think long because it's green, or they see negative, they may think it is short because it's red. It's not actually like that. We need to think about this in terms of volatility. So when we're in a positive gamma environment, typical dealer behavior is they're going to be selling into the rips and buying basically into the dips. Now, what does that cause? Well, that causes a volatility dampening environment, right? It's a little bit difficult to slice through like butter. Now, for a negative gamma environment, it's different. They would have to buy into the rips and sell into the dips. Now, when this happens, it ends up causing, more volatility. It's an amplifier of volatility. So I want to understand where we're at on the chart if we're in a positive gamma environment or if we're in a negative gamma environment, because it lets me know potentially what type of day I'm walking into. We all know that the killer of most accounts for most retail traders is going to be a choppy environment. People love to trade breakouts. People are always going to be looking for a breakout, but in a positive gamma environment, we may see a lot of failed breakouts because every single time we go and try and make a breakout, you have dealer positioning, selling into the rips, buying into the dips.
So Chris, for someone who wants to look at gex, what's the easiest way to get something like this on the chart and be able to analyze it like how you do?
I use a platform. It's a web-based platform. It's called Tanuki Trade. It's one of the platforms. Take a bounce off of a put wall or a call wall, but I do want to understand the environment that we're in. So here we are in the environment. Okay, we're in a value up structure. Let's just say we're in a negative environment. So I'm walking into the day thinking to myself, okay, we're in a value up structure and we are in a negative gamma environment, which means that doesn't mean we're going to go down necessarily, but it means that volatility may be amplified. We may see bigger moves, faster moves. And so I want to understand that before the market actually opens. So now we kind of have an idea. One thing as well that I look at is I do want to understand where the call wall is, where the put wall is, as well as the gamma flip zone. Now the gamma flip zone is basically where you start entering positive or negative territory. It's kind of like that line in the sand. So the second thing that I want to look at, and by the way, this is all done before the market opens. I will never do this while price is moving a million miles an hour. I need to know and build my scenarios before the market actually opens because I'm trying to be prepared, right? Yeah, I need a little bit of structure before I start clicking buttons. So the second thing that I want to understand is location. Now, when I talk about location, what exactly do I mean? Am I just talking about, you know, a box on my chart, or no, what I want to understand is, where do I want to do business, right? So if we're in a value up structure, now I typically do not want to go against this type of structure. I mean, maybe it's been happening, maybe these are daily profiles or cash session profiles, so we have, you know, Monday, Tuesday, Wednesday, and let's just say we're very bullish. Well, where do I want to essentially participate if I'm looking to follow trend? Well, I don't want to do it up here. That's an expensive place to want to get involved in the market. What I want to do is I want to wait for us to come into discount. So then where is discount? Well, if we have value area, then the basic idea of it is anything below value area is discount, anything above it is premium. Now, in a situation like this, we're already looking for a potential opportunity to continue this type of move, but I wouldn't necessarily, what does the open do? Let's say that we're watching this happen and the open opens up and starts dropping, okay? We're starting to break out a value area low. This is value area low. We're starting to break out a value area low and we're heading into discount. Do I want to sell it here? No, I don't want to sell right here, because you're selling in actually probably the most optimal area to try and buy it. So what am I doing? I have location. Here we go. We start moving into it. Now, what am I looking at? Well, at this point, what I'm paying attention to after location is realistically confirmation. So what is confirmation? Let's say I have a level. Here it is. It's a box. It's on our chart. How do I know that this area here is a valid level? Just because I draw a box on the chart doesn't mean that price is going to respect my drawing. So I have to pay attention. What's happening in here? What are the buyers doing in here? What are the sellers doing in here? Who's winning? Is there going to be result for that effort? So then what do we start looking at? Well, now we start going down into the granular side of things. So let's make a different drawing that's a little bit more zoomed in. So let's say we're like this. Okay, we come up, maybe we sweep, we start dropping down at New York Open, and here is discount. When we're in here, I start paying attention to order flow. Now, on my order flow chart, let's imagine this is a candle. I'm typically looking at two different types of candles. One of them is going to have a volume profile inside of it, and the other one is going to have a delta profile inside of it. Now, why do I care about that? I care about that because on a normal candlestick, you have open, high, low, and close. It's the results, like the scoreboard of what the auction actually did. But it's important to see how these are actually forming. Now, what is something that would be important? Let's say in this scenario here, the candle has a very large wick to the downside. But in this case, all the volume is down here, all of it. You got the POC here, the point of control, where the most amount of contracts are actually concentrated. I'm watching this. Now, let's say here's the same candle. Let's just say a 5-minute candle. And down here we have all of this delta, negative delta. And it's sellers. This is sellers here. Now you see all the participation from sellers happening in discount, in location, and they're not getting rewarded for that behavior or that effort. So then what am I looking for? Okay, now let's say we're identifying absorption happening in discount. Well, now what I want to see is I want to see the shift of dominance back to the upside with the buyers. So what would that typically look like? Now, let's say in this case that this candle closed bullish. Okay, we closed bullish. Now, what is that telling us? This is telling us that price pushed down, it was pushing down aggressively, and now they're in location, discount, in a value up structure, where all of this participation of sellers is building at the very extreme of this candle, and they're not getting any type of result for that aggression. Now the candle flips back bullish. What I want to see at this point, if we're using candlesticks, is I'm looking for the next candle to open up to immediately pull back. Next candle opens up, immediately pull back. And I want to see that aggression happen from the sellers again, but this time I want it to fail higher up.
Right. You want the buyers to keep pushing
failure
up.
Of sellers here.
Confirmation of the move up.
Let's say here's our volume profile. Failure of selling.
There's 1 minute of the trading day.
All right, so this is an interesting concept. So he's kind of using, because I think he's doing Forex, but he's looking for the confirmation of a candle, which is the bottom wick. The wherever the wick is, it's the pushing up of the wick, where if the wick's on the bottom of the candle, that means there's buyers pushing up. He's looking for confirmation that the next time the candle prints, the 5-minute, there's another drop, but confirmation that buyers are still buying. So he's trying to find momentum. Now, we use different indicators for momentum, so that's a little bit different than what he's kind of going the long route here. So I'm starting to like not care about this strategy. All right, so let's move to the next one. All right, so what I'm gonna do here, guys, is this is kind of like what we want to do is get into these things where
we did a phenomenal episode, already over 300,000 views, and the comments have been demanding that we see a Chart Fanatics episode with this phenomenal guest.
This is the basis of every chart. To me, when I see charts, this is all I...
So this is the #2 trader in the world, so that anyone's watching. And now we're going to see what she's talking about real quick. So I'm looking for strategies and ideals that we can apply to what we're already doing. So she's talking about
championships. The world's second best futures trader reveals her exact strategy.
It is going to blow your mind that this is so simple and looks so stupid, yet it can almost nail the bottom, like exactly. And I use the Bollinger Bands to help me kind of realize how close we are to reality.
What time frame would you say this is based on?
So you can do this on any time frame, but I will say I like it better on the...
Marcy Silfrain goes step by step through her exact process that allows her to identify market tops and market bottoms.
This is how I judge if a trend is intact. If it keeps forming these little rizzies and it keeps going down and it keeps hitting these points downwards, this happens over and over and over. And I believe it is the basis for all of the charts. What happens is,
not only does Marcy share her exact strategy that allowed her to achieve world-class results, she also gives 2 major predictions. I'm sure the audience feels the exact same way. And it's going to be super interesting, especially given the markets this month. We're recording this at the end of January, the last day of January. So hopefully we'll see what the coming months have in store for us. And
4 months ago, right? So this sounds pretty... I like this because it's very simple with Bollinger Bands. I want to find a strategy that it's not complicated. I want something that is support, resistance, very easy, a Bollinger Band, some type, something easy that we can follow. And then
I'm excited because I think especially the chart section we do later, by the time this comes out, we might have actually seen...
We're short. I hope you went short. Okay, now we all see this over and over. It's based on Fibonacci and all the retracement
section we do later. By the time this comes out, we might have actually seen where this is, where those charts have gone to as well.
Yeah, and I will say when I draw it, I'm going to be drawing it sort of like in a downtrend, but you have to also remember the inverse pattern works
in an
uptrend. Yeah, and I mean I can try. We can try to do some uptrend ones. I think it's just the easier concept to get in a downtrend. And remember, when you ask yourself, why is this pattern so simple and so powerful? What it really is in my view, is it's based on Fibonacci and all the retracements, and it's just kind of seeing all the retracements at once without actually drawing them. Okay, that's where I would think in my head where it came from. But so it is. These are my candles. Ooh, is my lotion gonna mess that up?
No.
Okay, we're gonna get some red candles. Oh, we're going down. We're going down big. Get a doji. Okay. Let's do one more big one. Oh, they're getting killed here. I hope you were short. I hope you went short. Okay. Now we all see this over and over. And then look what happens.
A big drop.
Have you ever seen a candle like that? Don't you feel like Silver had one of these?
Yeah, exactly. I was about to say,
This
yeah.
might be Silver.
There'll be some traumatized people.
We're making it dramatic so I don't have to draw 20 on the way down. Okay. So, what happens here? Let me add a few over here too, just so we have this like. How are my candle skills?
No, they're great. Most people just draw lines, so
No.
the audience will appreciate the effort.
Okay. Let's pretend this candle is not here, okay? And all we have is the price data up until this point, okay? What you want to do is you want to come in and draw a trend line, right? Right here, down. And what you will find, there's a name for this, okay? I have self-taught myself all of trading. So a lot of these like specific names and everything, I don't even know what they are. So truly, I don't know what you would call this. But, you know, I was thinking to myself, there's a trader whose name we shall not say. Isn't he known for renaming patterns?
Oh, yeah.
And so we're going to rename this. And I was thinking we're going to name it after your kids. So we're going to call this pattern a Little Rizzy. Okay? So from now on, this is known as a Little Rizzy. So whatever, they're going to leave me comments and say, hey, it's called this. I don't care. It's called Little Rizzies.
I'll back you up.
Okay. You'll back me up, right? So what this is right here is a Little Rizzy. Okay? And the way that I look at this, and you will see this over and over in the charts, if you find the low on the candle that had the lowest low in this pattern, and you measure from right here to the top of the trend line, so you want to go directly up this same candle, right?
Okay.
To right here, and you measure the price distance. Let's say this is $20. What you will find is the next move down will be this distance. So like this would even continue further down.
Gotcha.
And this happens over and over and over. And I believe it is the basis for all of the charts. And what happens is when you're trying to identify a trend, you're going to see these keep forming. So I would view this as a new Little Rizzy that formed, okay? Draw a trend line from here to here. Technically, I would have wanted this one to come a little bit lower. Let's just say it came down here, okay?
Yeah.
And what you're going to do is, this is how I judge if a trend is intact. If it keeps forming these Little Rizzies and it keeps going down and it keeps hitting these points downwards, and what you will find is I like to add like Bollinger Bands to it too. So for people that don't, that aren't like familiar with Bollinger Bands, I'm gonna like, let's just, okay, we're gonna pretend these are our Bollinger Bands. For people that aren't familiar with Bollinger Bands, because I know kind of the new traders these days don't use them, again, we're going to like dumb it down here. I like to call it reality, okay? So the middle line is like reality to me. If it's trading near the middle line, the price is like in reality. If it's up here, it's it's getting out of reality. If it trades above here, you're out of reality. So if you're out of reality, what happens? You have to come back down into it. So same thing here. If the price is trading near the bottom line, you're getting close to out of reality. When you come down here, like you're just out, you're gone. You're out of reality. At some point, mean reversion or coming back to reality has to take place. So when I use these Little Rizzies, I like when the first one happens towards the top of the Bollinger Bollinger Band, like up here or above reality when it's going down.
Yeah. So for the flip side, it would just be at the bottom side.
Right. So it will keep forming these, and you will find it. And when I pull up the charts and I show, I want to go through 1929, we're going to go through 2000, we're going to go through 2008, we're going to go through 2022, we're going to go through 2020, we're going to go through 2025. It is going to blow your mind that this is so simple and looks so stupid, yet it can almost nail the bottom, like exactly. It freaks me out still, like how accurate it is how accurate it is and easy to understand. But I mean, if you're looking at this, you can kind of tell this is kind of like you can kind of see, you're familiar with retracements. Like,
Yeah.
like you can kind of see it's really a Fibonacci retracement. So that's where the power in it is coming from. But they will just continue on. And as I was saying before, I really like when they're towards, if it's going downwards, I really like when it's towards the top of the Bollinger Band or the middle. And as the trend is fading, eventually it's going to start forming one towards the bottom that's not going to finish. But what usually happens is
So as you were mentioning, you mark out the bottom of that particular...
the lowest,
Yeah.
whatever candle has the lowest
And it's
low.
above there where you're trying to measure.
Where, yeah, you draw the trend line and you take the exact point in the trend
So it'll be the
line on
measurement
that
from here
candle.
to here. And so in this example, we said $20, let's say.
Right.
So then what you would be expecting is a $20 move below this area.
Below the low.
Based on that.
Yes.
Perfect. And for this example, I know it was already drawn on, but in this case, taking that same principle, would it be from this low to this high then?
No. Well, we're saying we're going to pretend this one came down lower.
Or just one more candle, yeah. Mhm.
We're going to pretend this is another little Rizzy that just formed.
Oh, I got you. So you
This
get
is
the
the low.
lowest point.
The lowest point.
Gotcha.
Now, sometimes the lowest point is the first candle.
Yeah.
Sometimes it's the last.
So this one might have gapped down and then.
Right. So we have to look at it, and we'll go over some charts. But you would measure it, and then you would measure this distance, and that's how much it would go
Extension next.
down. And so that's and when it gets in these patterns, it keeps falling. That's how I like to gauge. Okay, which way is the trend going? Now, on the flip side, if you start getting closes above this trend line, Lil Rizzy broke.
Yeah.
Not your friend anymore. Well, they're always our friends, but you know what I mean.
Yeah.
It broke. So it's not always going to work, but that would be your cue for, hey, this is not working. And again, I do tend to notice the first one or two that form on like a downtrend work the best.
So I like this. I think I'm having a good time. So for me, in Trading 102, reverse engineering, we have very specific, we have trading academies, we have trades that we do. But when we explain the rules of trading and how trading works, like when you listen to these, this was 4 months ago. She's the second best trader in the challenges. I don't do those challenges, but these are like world's traders. Like I've been invited to these tournaments and things, but it's kind of cool. But she's number 2 in the world right here. So, and it's so interesting that she doesn't know what these patterns or these things are called, because she's self-taught, right? Remember we talked about the percentages earlier, retail investors versus professionals, and most people are self-taught. So this helps you guys. You should feel in a way like, man, she's the second best trader in the world, and she's self-taught, and she's using Bollinger Bands, and she's looking at patterns. And to give you an example of what she's trying to say is the second move is always the best move, because if you follow any type of process of trading, what is the number one thing that people do? People look for breakouts, confirmations, retest, and the third move is always the biggest move, whether it's a long or it's a short. It's the same move. That's why the third move is always big. She's the second best trader in the country right now, and she doesn't even know why that happens, which blows my mind. But that's why I'm saying trading is simple, guys. You have a possibility of making a lot of money here because she's successful, and she still didn't figure out that the second move, there's always 3 moves, right? If you listen to me or watch all my videos, I tell you guys, you have to always keep in your mind there's 3 moves. There's the breakout, the retest, and the run. If you watch, not Fibonacci's, but follow the Elliott wave system, wave 1, wave 2, wave 3 is always the biggest. When you're doing a trade, as you'll find as we go on this journey, we always have to find a trade, the pullback, and then the next trade is the one we take. So you're going to see the 1, 2, 3. Well, I'm going to talk about a lot when I build my trade strategies of using the 1, 2, 3. So if you've been in my videos or saw me before, you know I always talk about the 1, 2, 3, and number 3 is always the biggest. She's the second best trader in the world. She doesn't even understand Elliott waves. She doesn't understand. You guys can be rich doing this. So hit ones in the chat if you're excited. And so what we're going to do here is we're going to move down the road and continue these things. So what I want to do here is I got to go get lunch. I got to take a break here. I've been on all morning. I've been on since early. But we've been about 3 hours here. So what I want to do here is I like this journey because it allows me to watch these YouTube videos and these strategies that these people, she's number 2 in the world and she doesn't even understand the 1, 2, 3. Guys, I'm telling you, it's so simple. It's so fucking simple. But we're going to teach you how to execute properly. But I want to go through this journey because I want to go through what you guys see so I can understand and we can do this together and we build, what's it say? I love learning and growing. Yeah, we got to learn and grow. And we got to find things that are easy. And here's what you're going to learn, guys. In Trading 102, reverse engineering, I'm going to show you guys the journey. The journey is taking these lessons that we learn, but I'm going to show you guys how to actually evaluate them, tear them apart, put them back together the way you think they should work, and then execute them at a higher level, which will make it successful for how you trade and how you think. So that's the next thing we'll do. So don't forget to follow. Make sure you go up in the corner and follow and go watch some videos and comment so the AI knows you want to be notified when I go live. So I'll probably go live later on today. I got to get some lunch. I'm going to take a nap here. We've been up trading all day. I'm in a Doge long right now, if you guys want to know. I'm going long on Doge. But I want to be in a scenario where we want to learn from what these people are doing out there. And then what I want to teach you guys is is how to take people's strategies, reverse engineer them so you understand them so that you can execute them, and then teach you how to build them to work even better so then you can find a way to trade 3 or 4 different ways that work so that you guys can get your 5 or 10 trades to hit the amount of money that we need every single trade, 360 or 180, so that we can make our 6 figures a year. That is what we are going to do. And we're going to start from day 1 from scratch. So I appreciate you guys for joining. I'm going to hop off right now because I do need to get some sleep, get some rest, get some lunch, get some sun. I'm going to actually probably go to a pool and get some vitamin D. But yeah, we'll hop back on and we'll figure out times and where we hop on, and probably normally 2 o'clock Eastern, I'm thinking, is probably my normal, right? 2 o'clock Eastern, 1 o'clock Eastern is probably my normal. But we'll work that out and we'll figure out that. So don't forget to follow, guys. Have a good Saturday. I'm going to get out of here. I got to go do normal things, but I'm excited for this because like I said, you can go watch this video if you need to rewatch it. It's going to be on YouTube under VC Crypto Nation. So we can go back if you need to find it. The link's in my bio. You can go in there. We have a free Discord you can join. You can go in there and leave messages, and VCCryptoNation.com, and we can talk in there, and you can get times of when we're going live and get the schedule. But I like this because we're gonna do this as if we were just learning how to trade, and I'm gonna show you how to become a trader literally by doing exactly what a brand new person will do, right? So have a good Saturday, guys. Welcome to it, man. I appreciate you guys. I hope this is you know, I hope this is kind of like, I hope you're excited. I hope this, you know, really gives you a different experience and something you can get value out of and help you become successful. So I will catch you guys later, and we will post. Watch for a video for times of this. But yeah, we'll get it all going, guys. So good luck. Have a good Saturday. Get some sun. Enjoy your day. And then I'll probably hop on tomorrow on Sunday, and we can take a look at the market for the upcoming week for Monday. But yeah, that's where we're at, guys. So have a great day, guys. Enjoy your day. Thanks for joining. Have a good one. Don't forget to follow this account. And I'm not going to send you any messages from TikTok saying come join something. So we don't do that. Everything's free. Go hop in the Discord, guys. What a wonderful